I see we have people joining. We're going to give everybody just a minute or two to hop on the line. I know we're right at 7:02, so we'll probably get started at 7:03. I think we can go ahead and get started. So good evening, everybody, and welcome to this panel, Career Currency: Insights from Industry Leaders in Financial Services. My name is Logan Snyder, and I'll be leading the panel this evening. Professionally, I'm a vice president at JP Morgan Chase on the strategy and process improvement team. I've worked also at Capital One Financial and a variety of technology firms, and I'm really excited to be starting the year with this kind of panel. I know a lot of people at the beginning of the year kind of take stock of where they are in their career and are looking for additional skills they can develop, tips on how to look at their career and how to develop in their career. And I think this panel is really going to be great for doing that. On the line, we've got three industry experts from across financial services, with experience in financial services, also in consulting, in tech, so a variety of backgrounds to provide a really, I think, well-rounded perspective on the different functions that exist in financial services and how you can really improve and grow your career in various areas. So for us, I think this evening, the goal is to kind of take from everybody on the call the wisdom they have about improving and excelling in their careers so that we can continue to launch successful careers going into 2024. So with that, I will give the panelists an opportunity to introduce themselves. And I think Richard, you were going to go ahead and start first and tell us a little bit about yourself and your background. Or sorry, Ted was actually going to go first. Ted, do you want to tell us a little bit about yourself, your background, and what you do today and how you got there?
Yeah, cool. Happy to lead it off. Thanks, Logan. I appreciate putting this together. So my name is Ted Barrett. I was Chicago class of 2016 undergrad. After college, I started off at a boutique investment bank called Whitehall and Company, which is heavily focused on infrastructure, specifically power. So a lot of the work I did was raising capital for constructing new power plants. There are a lot of funds that invest in alternative assets, and they'll look at infrastructure assets to hold instead of companies or private or public companies, bonds. Also worked in the renewable space for constructing new renewables projects and selling operating projects. I also worked across a bunch of different infrastructure segments as well, including some transmission deals, rail deals. And my work there ended up transitioning into infrastructure services, such as we looked at traffic control deals, street sweeping, originated and closed two deals in the fixed base operator space, which are folks that provide fueling and hanging for general aviation, so non-commercial aviation. And that led me to my current role. Last year I left. I was at that investment bank for 7 years and started my own shop doing private equity on the smaller end, 2 to 8 million of EBITDA, smaller scale deals that heavily focus on the infrastructure services space and other adjacent business categories. Taking the experience I had from investment banking and going off on my own. What I work in it's called an independent sponsor. So we raise capital deal by deal with capital partners. That's more of an emerging space that's gotten more popular in the last several years. And often that's used as sort of a precursor to raising a traditional private equity fund.
Thank you, Ted. Richard, do you want to go next?
Yeah, totally. So my name is Richard Zhang. I was a class of 2012 undergrad and then 2017 Chicago booth. So did the double stint over there. It's funny because the business school thinks the undergrad's a little bit weird, and so I got a couple of funny looks while I was introducing myself there. But I'm still the undergrad at heart. Maybe a little bit about my background at U Chicago for those like interested at all. started off in Breckenridge, the proud and mighty on the east side of campus, and lived there for 2 years. Then I went and became an RA at BJ. If anyone's familiar with Lynn Matthews' house, shout out to Burton Judson. And so then after graduating, I worked for 2 years as a commodities trader. And first couple of projects were about like the ag market, like life cycle of the hog, how long does it take for a cow to reach market? So it's like a very interesting sort of like first foray into the finance field in like a sort of a interesting way. Then went back to business school, did summer in investment banking, did my own startup for a while. So I actually graduated and worked on my own startup for a bit. Before that, went under, and then I worked at Capital One actually with Logan in one of the strategy functions there. And so, yeah, again, shout out to Capital One. And then in 2020, I moved over to McKinsey and also relocated to New York. Here, I'm a engagement manager, been here for about 4 years now, working primarily with financial institutions on just a variety of strategy and corporate finance topics. I'd say like 75% of my work is with traditional carriers and players in the space, 25% maybe more with the sponsors who are trying to invest in the space. And so that's kind of where my like current expertise, I guess, is in now, which is like former banker posing as a consultant, I guess. And so hopefully I can speak a little bit to like both sides of that, especially with this audience. So thank you for having me.
Thanks, Richard. And last but not least, Elizabeth, do you want to give an introduction on yourself and your background?
Happy to. My name's Elizabeth Miller, and I graduated from UChicago in 2016. I lived in Burton Judson, Richard.
Hey.
So that was a strong connection point there. So shout out to BJ. When I was at UChicago, I was actually not an econ major. I barely took any classes related to finance. I was a political science major. And I had a challenging time actually getting from undergrad into a financial services career. I started my career at Standard & Poor's, and I was a product consultant, helping basically bankers use Cap IQ. And I was very lucky to work with bankers who were at Morgan Stanley, and eventually I finagled my way into Morgan Stanley. I worked at Morgan Stanley for 5 years, and I started out my career in private banking at Morgan Stanley, specifically working in business development. And then I was tapped on the shoulder to become a COO. So I was a COO for about 2 years. And then I concluded my tenure at Morgan Stanley in investment platforms. And I was lucky in that role to actually oversee the E-Trade integration. It was the techiest role within Morgan Stanley. That's what I like to call my role, as techy as you could possibly get at a bank. And I realized during that time that I wanted to actually explore technology as an industry. So I applied to a bunch of different jobs at FANG. I got rejected from all of them. And then I realized that in order to pivot successfully, I would be better off applying to business school. So I applied to business school. I got into Harvard Business School. I was there for 2 years. I did my MBA summer internship at Google, specifically servicing YouTube on the strategy and finance team. So I was able to use my skills from financial services in that role, got a return offer, and then recently started full-time at Google servicing YouTube in a strategy role where I do a lot of modeling for monetization of the platform and growing core users. So I am happy to speak about all of that, specifically pivoting roles and realizing, based on a history of financial services, how those skills are fungible to other areas. And I'm also happy to talk about how I built out my hard skills after having graduated with a social sciences degree and went back to school, like Richard, to really get that foundation in the hard skills.
Perfect. Thank you all for the introductions. I was saying at the beginning, we have like a wealth of knowledge here, and that comes out in each of your introductions. So really excited for the conversation. Elizabeth, you mentioned skills. So the first question I did want to ask to the group touches on the topic of skills, since I know a lot of people on the call are probably thinking, what skills do I want to develop going into 2024 in the new year? So first question for the group. In your experience, what key skills are most in demand in your area of financial services today? And how do you recommend recent or not so recent alumni cultivate skills to excel in their career?
Yeah, I can take a first pass at this, Logan. So, for me, at least from what I've seen in my industry, it's critical thinking skills, and it's a little bit of a broad term and kind of a cop out. So let me try kind of explain what I mean by that. Like, at least with consulting, like so much of it is about getting to a outcome that you want with sort of the fastest amount of analysis that you can put together. That's true of a lot of, finance like jobs out there where like the technical skills are the prerequisite for the conversation that you want to have down the line. And so in when you are a junior consultant, yes, you're expected to know the Excel, you're expected to know the modeling, you're expected to know the data and all the analysis. But as you like move up in the ranks, you're expected to be able to understand like what is the bigger question that I'm trying to answer, what is the hypothesis that I have, and what's the steps that I take to get there. That planning step is there's a lot of critical thinking involved in that. And so like a lot of people, especially when they're fresh out of college or out of some sort of academic program, they're used to operating in structure that is like, I had this problem set, I had this, and I'm going to go execute that super well. And you'll find that the training wheels off that fall off pretty quickly in a way where you need to actually define the structure for yourself. Like what I have this white space problem. Company wants me to double their EBITDA. There's like a million different ways to do it. So like, what do I need to do? Like how do I prioritize that and get to the right analysis? And that's like, I think one of the distinguishing factors of like really good junior consultants versus like those who are more like mechanical in what they do.
That makes total sense. Anyone else thoughts on skills most in demand for your area?
I'm happy to jump in. I think Richard nailed it when it comes to the soft skills. Definitely problem solving. I would also say communication goes hand in hand with that. Communication doesn't just mean clear verbal communication when you're presenting a deck, or, seamless written communication when you're sending out an important email to an executive stakeholder. I'm also referring to the act of tailoring a communication specifically to an audience. So communicating very clearly with the data science team what your requirements are. When you speak to a prickly stakeholder, how do you immediately get their attention and lead with the answer? All of those types of communication skills are critical throughout your entire career, not just in the early phases of your career. What I would like to highlight is some technical skills, which I think are critical in the very early phases of your career. If I could give you one piece of advice, if you're just coming out of undergrad or if you're new to the industry, it would definitely be get very fast and crisp in Excel. That's really important. And I would take advantage of training the street, really pay attention during those classes. And if anything, supplement. So I would really look at amazing models at your firm, try to replicate them quickly, see how you could be the most efficient as possible when you're developing your models. And then what goes hand in hand with that is good logic. So get really good at, logicking through complex analyses and try to get fast at mental math.
Awesome. Makes total sense. Ted, anything to add?
Yeah, I mean, I think a lot of this was touched on. I mean, what I've seen specifically in investment banking and private equity from my friends in those industries is that I think particularly recently, I think a lot of this is probably due to COVID and just difficulties communicating between, a lot of modeling training is hands-on in banking. So what I've heard in private equity is that there's a pretty big skills gap in recent analyst classes trying to transition into private equity. So I think modeling is particularly important. And also some firms, a lot of them want analysts to have those skill sets. Some firms sort of put that more on associates. So that seems to be a critical skill for evaluation. And as Elizabeth mentioned, there's a bunch of courses out there and third-party certifications. I think those would be, some of those are really constructive if you're taking modeling tests, if you're outside the industry and trying to break in. In terms of day-to-day, what I find is understated in terms of prep is writing skills. And to Elizabeth's point, communication. And those are all tied. When you're more junior, you're writing less, but as you move up, sort of in investment banking, private equity, you're articulating theses, you're writing a lot. You're writing emails as well in communications, and people will be scrutinizing that. So if you can't write a good email and you can't communicate directly, you're not going to get autonomy in terms of communicating with your clients. and being able to build those relationships, but also, gradually you work towards, taking ownership over large, memos, 50, 60-page documents. And so writing's important, but I find that that's really doesn't come up in interviews. So they don't screen for that, but that's often important. And I guess speaking more generally, which I guess this isn't necessarily in demand from folks, but it's important to know when you're looking at different roles, if you're trying to figure out which role within finance or any career you're looking for, what the day-to-day is like and what it entails. I find in investment banking, a lot of it's often very sweaty. It's a lot of hours a week, depends on the shop, depends on the culture. But I find it difficult. It's hard when people come in and they expect it to be sort of a 9 to 5, and then the expectations are mismatched, where there are managers who want you to work till the job's done, whether it's 3 or 4 a.m. So knowing that and setting expectations correctly and understanding that is important to making sure you're pursuing the job you want. And also time management is critical. I think it touches upon what Richard and Elizabeth said, because you're managing multiple projects. And again, not something that's really screened for, but you have multiple managers who need to communicate effectively, and prioritize so that you can balance out, make everyone happy, and get some sleep in the process. But I think, yeah.
Super helpful. Any particular resources you guys would push people towards if they're looking to learn one of your skills? I know, Elizabeth, you mentioned Training the Street as a resource and training program that people might find helpful as a starter. Anything else you guys have found particularly helpful for those skills you mentioned?
Yeah, I can. Oh, sorry. Just go for it. So Training the Street, I haven't used. A lot of people have used. Also Breaking into Wall Street that's more of a blog style. It has a component that's also course related, but it's got a lot of useful articles for entering interviews and understanding that. But they have modeling courses as well. And recently, Wall Street Oasis put up a detailed modeling course, and they have different ones for different specialties, and that's actually really useful. And then also broadly, there are forums that can be useful for it. The Wall Street Oasis is a mixed bag. A lot of it's bad content, a lot of it's not finance related, but there are some people in there who are very useful and useful threads. So if you don't have the answer and don't necessarily have a person in real life to talk to, it's worth seeing what's out there and checking that. And also leveraging, your network. I mean, if your friends, change jobs, see how they prepped. They may have guides or resources that they can send your way. And I think, they'll have a good sense of what's relevant.
Yeah, I think on the more technical side, yeah, I actually think Training the Street is also very good. Like we even use it in consulting. There's a book called Say It with Charts, which is like sort of a McKinsey standard for like a training, like which types of visualizations you want to use for this type of thing. And then a dark horse one, but Strunk and White, like learning how to write effectively and mastery of prose. That one's really important. And then just because I talked about critical thinking earlier, it's really tough to like study for that kind of thing. It's one of those things where you just need to be proactive in your day-to-day work and just thinking about the big picture, tying things together, and just taking some time to synthesize. Like, I'm working on this analysis. What's the implication? Why am I doing this? Et cetera, et cetera.
Elizabeth, anything to add? I know we got a lot of good resources from that already.
Well, this isn't a specific training resource, but I would probably say rely on supportive people around you. So I really learned a lot about all of the skills mentioned, including the soft skills like critical thinking, just through osmosis, being around people who are willing to mentor me and sit next to me and show me what they were doing. So I highly recommend just leveraging the people around you as well.
Awesome. Great. So we'll close up the skills topic, but with that, I wanted to jump into a little bit more of the career trajectory question set. So talking a little bit about your priorities when you started your career. When you started, what were your top priorities for your career? And what did you do to achieve them and make them a reality? And I'll open it to whoever feels, I guess, strongest they've accomplished their career priorities can maybe go first.
That would not be me, but I'll go first. So look, I think I am maybe also Elizabeth to some extent, like a bit of a job hopper in my 20s certainly. And so like you like trade off breadth for depth at times. And like it's never, at least for me, it was never like a very profound choice moving from point A to point B. When I came out of undergrad, I was like, let me find a really good paying job. And look at that, trading pays really well. And so we went with trading. After a few years in trading, to be candid, I felt like it was not a great place to develop career-wise. And like for people who are interested in trading, like go get your bag. Like it is a great place for that. And then like I felt like it wasn't the right industry for me. So going to business school, had a little bit of another hard or soft reset. Tried investment banking for a bit, tried startups for a bit, worked in corporate strategy for a bit, like, kind of been all over the place. And each time it was like, first off, there's a element of like, yes, I want to like learn sort of the like finance skills, the business skills that come with the title of wherever I'm at. There was also like a large component of that's like frankly just like life happens type of thing that like dictates your career. And I say that because like, there's a lot of young alumni on this call. There's a lot of like more tenured alumni who like maybe like can resonate with this. But like the career arc is like a non-linear path. And it goes up and down, it goes up and down. You're like, and it goes sideways too. And so like, maybe this is not the answer that the the panel's looking for, but like just look for good learning opportunities. Look for stuff that like gives you the right platform to be the biggest badass you can, and look for those opportunities, and then don't sweat it too much about like, what form that takes. And so that's like, I guess, my reflection on everything.
Awesome. Thanks, Richard. Ted or Elizabeth, anything to add?
Well, I felt called out specifically as a job hopper, so I have to contribute.
Ah,
I totally agree with Richard. I think for me, when I first started my career, my top priority was just trying to figure out where I wanted to be, like what type of a career I wanted to have, what role I wanted to land in, and how I wanted to create impact. So I think in order to do that, I kind of segmented my thought process in three ways. I wanted to learn transferable skills. I wanted to build a network, and then I also wanted to show my worth. And I think that was the most important thing that I did. I tried to show my worth through gaining credibility and doing a good job of my projects, and also showing that I could adapt to change. And so when I did those three things, I was able to gain exposure to more and more projects and receive general knowledge through osmosis from supportive managers and colleagues. And from there, I was able to gain that exposure to other roles and then eventually kind of hobble my way into different jobs where I was able to learn, okay, I got a lot out of this job. Here's what I liked, here's what I don't like. And as you kind of move through that process, you get closer and closer and narrower in refining where you want to be. So that I consider myself to still be in the early phases of my career. And I think that I'm still doing that now, but it's served me well so far. So I highly recommend just taking the time early on to prioritize self-discovery, and enabling yourself to be the recipient of opportunity so that you can narrow down what role you want to be in the future.
yep, that's awesome. That makes total sense. Ted, I saw you come off mute.
Yeah, well, I like these insights, but I didn't follow them at all, personally. So I was in my role for like the vast majority of my career, and have recently changed. And I think for me, I really was focused on. I just had this maybe obsession with just trying to ascend within banking, because I think in college, I just figured that was my path, and I was cut out for it, and that proved out to be sorted. It's directionally accurate, but I think that I think I should have I think I put a lot of pressure on myself to seek promotions as soon as possible and try to move up, and then was hard on myself. I think that damaged. I think that was harmful at times. But then also I think I didn't have the perspective that careers are long and people change jobs quite a bit. I feel like that's difficult coming out of Chicago, because everything is so linear. It's like high school, you have grades, you go up. College, you have grades, you go up. But it's important to remember that you sort of have 40 plus year career, plus or minus a bit. And a lot of opportunities come up and you can't necessarily see them until you are in a role and you mature. For example, a lot of people change after business school. A lot of people transition a lot, and the other folks on the panel have more experience changing roles. But I think as a priority, I think Richard said this. I mean, early on, I think it's worthwhile to find something where you can learn and that's a good brand, and from there, you can branch into a lot of different stuff. I think over time you early on you have optionality, learning and branding, and then you sort of specialize over time. And that's I guess helpful. I guess in terms of priorities for myself, in terms of my role, the way I thought about things was by just understanding the hierarchy within the organization. Maybe this goes to other topics, but basically understanding what was expected of me and also the role above me, and then trying to lay out and sort of piecewise figure out how to do each task to see how I would make sure I was advancing, and seeking feedback early on in the first several years of my career to make sure I was on that path to either move into something new or move up. I think I bounced around a bit, so I apologize, but hopefully that worked.
I think we got some really good themes, and I heard some consistent themes throughout about learning, self-exploration, finding a good brand, and then specializing. So this was awesome. For our next topic, I wanted to do a little bit of a flavor of the month, maybe longer than the month, but to talk a little bit about changes happening in technology. So we all know a lot is going on in technology, especially with AI and automation and those kind of topics. So out of curiosity, how is technology currently impacting your industry, and how do you recommend recent grads or people trying to grow in their career adapt to technology to continue to grow? And I'm kind of going to look at Richard a little bit for this one, because I know you have a big sampling of companies that you engage with.
Right. Honestly, Logan, I think I have to recuse myself from this one because I currently work in technology, to be totally blunt.
I mean, I'm happy
Fair
to
enough.
lead as well.
Ted, go for it.
And I'd be locked in the order, and I get to go last and just cred for my answers, which has been pretty nice, frankly. But so for me, I mean, I think it varies because I'm working by myself right now. I have some advisors I work with as well, but I'm on a very small team. I think it varies for a larger team. So it's, I guess, two answers. I mean, I think if you're on a bigger team, it might be harder to impact your company's technology. There's maybe software platforms that you use, and I would say be familiar with those because those are generally time savers and will become increasingly critical as part of your role. Maybe you have some sway in what your organization uses, and maybe you can make recommendations. But I think it's probably a better priority to see what's out there in terms of making your job easier so that you can have more impact or just work, get stuff done in a shorter amount of time. Amount of people who just use Chat GPT to draft summaries. It's like it'd be like write an investment memo on road safety companies, and you have to revise it a lot, but it can give you some language, and maybe that cuts it down. I mean, very simple application, obviously, but maybe there are tools that you can use individually that can help expedite your work, and I think those will be increasingly important. But if you're looking at something leaner, like for me working by myself, I have friends who are working in machine learning and AI, and we're seeing how we can apply that in private equity. One of my friends is looking at a tool that's helping review and pull out key information from investment memos. So if we're looking at deals, we can sort of synthesize that. I mean, there's certainly opportunities to really cut down on a lot of the manual work. And other tools that we use sort of more standard databases like HubSpot, which are way more efficient doing things like manually for outreach. So I think, on the personal level, see what you can leverage and make yourself faster, because if you can output more, certainly beneficial for your career. But if you're a leader and sort of choosing the technology, it seems like now we're at a junction, and private equity and investment banking are historically not good at using technology. When I talk to friends, I never really used Discord. Don't know if I've used Slack once. Banks don't use any of that stuff, and I think that will be a differentiating factor because a lot of their leaders are in their 60s, 70s looking to retire, and now a new generation is taking leadership. And so I think there will be a lot of change, but it depends on your role in that organization, how you can impact that.
And I was going to say, Ted, I totally agree with your insight. I think even the banks I've worked at, it feels like that the implementation of some of these new technologies has been limited, but there's tons of appetite, and it feels like there's a little bit of a gap either in the leadership being entirely bought in, or just a skill set from employees of being able to identify where they actually have real world applications. Like I feel like every company I hear about now, every startup is like powered by AI, but like they can't really tell you how or what it does. And like I do think one of the skills that'll be helpful for people is like if you're the guy at your company who can identify something that can be automated or simplified, you're definitely going to be really valuable to your company, especially on like the time saving front and the money saving front.
Yeah.
Yeah, I mean, I think for a lot of these types of jobs, at the analyst associate levels, you're sort of expected to find ways of creating leverage, like put a force multiplier on the type of work that you're doing. And so the technology is definitely a key factor in that. I think like very tactically, what I've seen be effective is like the research tools out there that like can trim down some of the manual parts of that. Um, Similar to what Ted was describing. But and then as far as like the parts where I think a lot of analysts try to use it uh, as their personal scribe at times with drafting memos, drafting documents. And I found, at least so far, that it's been like more effort than it's worth to like go through the edits and actually fact checking things at times. So, to each their own. I think like, again, I think the research part's where I found the most leverage.
It's almost to me that was just an example that I threw out there. Richard definitely knows more than me about AI applications.
Yeah,
So
for sure, for sure. I am like to your point earlier, like a lot of these professional services are like the last to like properly adopt these tools.
Makes total sense. But keeping on that kind of theme of disruption and change and making the most out of it. But one thing I wanted to ask about when people kind of look at their career and make some of the career switches that we've talked about, wanted to talk a little bit about kind of your all perspective on durable roles. So different industries have kind of been facing some uncertainty. I think the world has been facing some uncertainty generally. What roles do you think in financial services or in companies broadly are going to be the most durable that you think people should try to get in, either a specific role or type of role that you really feel is going to be durable, given that we might be going into a little bit of an economic winter?
yeah, I'm happy to lead off on that. So I mean, my roles have been heavily analytical, but also heavily people oriented, and that sort of becomes more of a thing as you go up the chain. Um, I think one thing that can't be automated is probably personal relationships. That sounded really corny, so and maybe AI will do that. I don't know, but I mean, a lot of roles come down to sales, and I think a lot of things are relationship driven. So for me, it was you're working to sell a company in investment banking. A lot of what we do is M&A, so it's working with clients, collaborating, understanding their needs, their wants, understanding more subjective elements of their businesses, but also working with investors, trying to market, trying to build relationships, and that extends across everything. Right now, in sort of my private equity role, it's very similar as well. I think that probably is a good way to insulate. I think that's probably one of the later things to go, even if specific tasks are automated. And also understanding how to utilize any sort of automation, sort of as we discussed, will keep you relevant because most likely someone will have to direct these programs. But I think considering your role and getting involved with client management and sales should be helpful in keeping you relevant and sticky in your job.
I think I have a complementary opinion to that. Like I mean, you guys all are interested in financial services or work in financial services. It's not like you're going into the horse-drawn carriage industry or the Polaroid camera industry. This is a durable industry. Your role will likely be durable. I think I don't think about durability in terms of the role. or the job family or the industry, I really think about the durability of skills. And this goes back to what Richard was saying at the top of our conversation. If you have durable, transferable skills like critical thinking, problem solving, leadership, strong communication, then you will always be in a job within your industry, unless there's massive disruption and transformation in the industry. But I don't think that our technology is at a place where we're going to have more than just incremental impact. So I would focus much more on developing a key foundation of durable skills in order to ensure you won't be obsolete or working in a role where you don't feel like you're able to ride the wave of change in a positive way.
Yeah, I mean, I've seen my fair share of restructuring programs in the past, and it's never like thematic by like job, family, or like any sort of like a skill per se. It's like the most like, I guess, recession proof. Again, just agreeing with both of what you guys said. Like, are your managers going to go to bat for you when this stuff happens? And then two, like, if it does happen, are you like, is your body of work good enough such that the firm is going to hurt when you leave, and or the next person is going to really want to hire you? I agree with both of what you said.
Awesome. And I'll dig into that theme a little bit as a follow-up. I know for people who are joining this call kind of looking to move up in their career as opposed to make a transition, the role of the manager obviously is very critical in every industry, especially in financial services. What advice do you all give about managing up, about managing that relationship with your manager so they're not just a manager, they're a supporter and a sponsor?
Yeah, so I mean, look, there's a couple of like just like baseline like soft skills and intangibles. Like it's the classic like bring the energy, bring the enthusiasm, bring the willingness to learn, be a sponge during all the meetings, and like sort of do all that stuff. And then like and that puts you in like the bucket of like people managers want to invest in. Like that's like sets you up well. And then when you talk about like communicating that to your manager, I think there's like a there's like a very, so let me actually take a step back here. In the world of manager like entities for people, I would put three buckets up there. There's mentors, there's apprentices, and there's sponsors. And they all hold very different functions in your professional life. Okay. So for your apprentices, it's exactly what you think it is. It's like senior analysts, people who've been in your role for a while, people who teach you and like can sort of bring you up to speed. Then there's mentors who like may or may not actually work with you, and then they offer a second person opinion on like what you're trying to do and give you like a little bit of sounding board. And then there's the sponsor relationship, which is I think the closest to like what you're describing, Logan, which is like I would like you to create opportunities for me, and I will go after those opportunities ahead of anyone else's. And that is very much like a define the relationship type of of thing, because like you cannot have like 10 different sponsors at any given point, like wherever you work. You have like 2 or 3 sponsors who like open up opportunities, and you jump through those holes when like they open them up for you. And so maybe tying this back to your question earlier, like there's like an intentionality there where you say like, hey, like I want to learn about this, and I would like to, I had this hypothesis on how I want to achieve it. I want to like work on these projects. I want to thematically develop in these areas and like, go for that. And then you align on that with your manager, and like you develop this like sponsor like relationship where they're actively trying to open up these opportunities for you. And so then that you'll see like the difference between that versus more of a passive approach where you're just kind of like checking the box from day to day on doing all the work. There's like an intentionality behind it on like you have you have agency and control and an agenda for your career, and you outline that with your manager, and they're able to sort of help facilitate that, because they're not going to tell you like this is how your career should go. You have to like define that for yourself.
Awesome. Elizabeth and Ted, anything to add?
I'm happy to add my thoughts. I mean, I think that Richard covered it, especially from a um, development perspective when it comes to, using a playbook for what to do to get promoted and to progress in your career and gain additional responsibility. When I think about managing up, I take it also to a tactical level. I think that managing up ultimately means that you are anticipating your manager's needs and you're meeting and exceeding the expectations for delivering a set of results. And so when I think about managing up, I think about how it really takes two to tango, right? Like you have to meet your end of the bargain and your manager has to meet their end of the bargain. Sometimes a manager just has a personality that is not going to budge. This happens sometimes and it's challenging, but in order to manage up, you have to kind of crack the case and understand what your manager wants. And that includes caring about them as a person, knowing what they care about in terms of their own development, because it's your job as an employee to make your manager look fantastic in every meeting as an employee themselves. But I think that in order to really isolate those characteristics, you have to get a few of the basics down, right? Is your manager receptive to being managed up? Meaning, do they trust? So if they're a micromanager, it's going to be harder to foster that relationship. When you do an exceptional job for them and go above and beyond, do they give you appropriate credit in a public forum? Are they capable of delegating appropriately? Those are things to consider. And some managers are easier to move on the scale than others. On the flip side, you have to make it easy for them to trust them. And that means you have to develop credibility. And credibility means performing with zero defects. It means delivering work on time, if not early, so that your manager could review the work and provide you feedback with every turn. And that means that sometimes you have to do a little bit of extra work and you have to create the work back plan. But over time, as you prove yourself, you're going to be able to have more runway. And I think that one very tactical piece of advice that I'd like to share that Ted actually taught me, I'm going to give him a shout out, is create a checklist for all of the things that you need to be sure are squared away before you hand in a deliverable. So for every deck, make sure that you're formatting in the appropriate manner. Be sure that every footnote is accounted for. Make sure that you're addressing all comments and feedback, and do the same thing with every model, every communication, every email. And then over time, as you develop that track record, you're going to gain that trust and you will have effectively managed up. That's my experience at least. But Ted, I know I cold called you in this. Do you have anything to add?
No, I mean, and you both really covered a lot and gave great responses here. I guess a few things I would just add on Richard's point. I think being someone that, if you're friendly and want to grow and learn, and you're someone that managers like, that's a really important step. I think coming from the perspective of a manager, it's incredibly rewarding for me to see the growth of the people under me. And as I've been, moved up where there's layers of people, it was great seeing, people that I worked with and trained to get promoted to be in the role I was in when I was training them. That was incredibly rewarding. On the flip side, it's a bit soul crushing when people seem to not want to learn. They're not progressing, maybe even regressing. Maybe they're checked out, and then you have to pick up the slack. But in the former camp, it really makes it rewarding as a manager when you see the fruits of your labor and seeing someone grow and advance in their career. So just being positive, wanting to learn, and putting in the effort is very important. And then one thing I think what I kept in sort of my head as I was trying to work up my organization in banking was thinking to myself with everything, how can I make my manager's life easier? And that's sort of in line with understanding what each role does in your organization and saying, what's the gap between me and the person who manages me? And maybe there's, 7 things an associate does that I don't do yet as an analyst, but maybe I can do one of those because I'm, getting close on that skill set. Maybe I can ask my manager to take that on or get close to it so that maybe they're, checking the work less. Or, we're doing a model walkthrough and I'll lead the vast majority of it. And they just are sitting there and chiming in if I get something wrong. It's good for my personal growth, makes their life easier. They can do less and ultimately leads me to take on the role later. But sort of, understanding what they're doing and how to get to that point and bridge that gap is important and helps everybody. That's all I got. You guys covered everything.
Great. It was tons of tips. I really love that. And I actually took some things down as well. So that's awesome. I was seeing a little bit of activity in the chat, and I was thinking we could move on to the topic of networking. I know, Richard, you mentioned the various people who play a role in your career, I think you said apprenticer, mentor, and sponsor. Curious for everybody on the call, like how you've approached networking and getting to know people either at work or outside of work that have helped you move up in your career, or potentially help you make a switch to another company, which I know some of the people in the audience are looking to do.
Yeah, I mean, like my when I was when I was out of business school and unemployed, my referral to Capital One came from a friend. When I switched to McKinsey, that referral came from, again, it was all referral based. And like the and seeing this panel right here, which is Logan's network, you start to see sort of the power of like how much even like the trivial relationships that you had, or seemingly trivial relationships that you had in school, like really amplify and cascade later on in life, which is like super important. And so like, obviously, like, keep in touch with those that you were close with. You never know what happens. And then when it comes to like more of the cold emails and like approaching the broader world here, it's a little bit of a numbers game in my experience. Like you just have to like put in the effort to put, like, very tactically put in like a very well crafted email, talk about your similarities, why you're interested, and and just like see what happens. And find some commonalities, and then give it a shot. And then you just understand that it's going to take several tries. You might need a follow-up or two. It's going to be frustrating, but like that's sort of the best way to do things. If you don't have like a warm connection, or like a secondary warm connection or something like that. And so like with this type of industry, especially with a lot of in-demand jobs, it's just one of those places where like you typically don't, frankly, you don't resume drop into a place like Morgan Stanley, if I'm being honest. So like it's one of those things where you just have to do the groundwork. And so it's gonna suck. You have to do it. And so like that's the only advice I have. Just keep your chin up.
I totally agree. I think if I were to add on to what Richard had said, I would say, firstly, if you're at a firm and you're happy and you just want to learn, I would really think about networking in terms of identifying not necessarily people who are important, not necessarily people who are in the role that you want to be in. That's critical. But if you want someone who could become a lifelong resource to you and mentor, I would strongly recommend isolating individuals who are very generous with sharing information. And that typically includes people who are very secure in themselves. The people who have made the biggest changes in my life have been the people who have told me things that, like, they wouldn't necessarily put on their LinkedIn, but have been amazing lessons for me. They've shared mornings, they've shared resources, and that's really helped me over time. So that's number one. Number two, in the spirit of not pursuing, random people who just share an interest, I would say this is more of a warning: do not pursue homophily. So if you're a woman, don't only network with other women. That was something that I noticed a lot of my peers did. I strongly discourage that. Identify people of diverse backgrounds who could help you. You would be surprised as to how many people would extend a hand and help you. And I think that that's something that a lot of people don't know. A lot of people think that they can only reach out to people who went to their school. Although UChicago, like, we're all here to help, but reach out to people who have gone to different institutions, reach out to people of different backgrounds from you. People are very willing to help. My next point, my third point, which I think was most instrumental in my career, is if you are in an area and if you're not thrilled with your career prospects in that area and want to switch but stay within a firm, I strongly recommend actually joining an ERG, an employee resource group. So I joined an employee resource group. I joined the Women's Network of Morgan Stanley, and the leader of that network put me on a special project, and I performed very well in the project, and she recruited me onto her team. And that's how I was able to pivot from the private bank to investment platforms. I've had colleagues do the exact same thing by joining interview panels, development program teams, whatever it is. Just join an employee resource group. You would be surprised as to how many people are actually joining for the sole purpose of meeting people outside of their team who could help them pivot and join different roles. It's a great trial ground for also proving out your credibility. And then my last piece of advice, and I promise I'll wrap up soon. I realize we're at 7:52 p.m. Eastern, but my last piece of advice for you guys is, let's say you're at a firm and you're realizing that it's not for you and you actually want to pivot industry. At a certain point, consider gaining a network through pursuing education, an MBA, or consider getting a large network through joining like a board or nonprofit organization or club or something that is totally outside of your work that allows you to meet large groups of people who are all pursuing a similar change. And that's what I did. That's actually why I went to HBS. It was because I knew I needed to pivot industries, and business school was the ticket to pivoting.
This was great. And the reason I was making faces smiling, because Elizabeth has like the same philosophy as me, and then Richard said a bunch of stuff I was going to say. I was unemployed coming out of Chicago undergrad. And for me, it was a lot of networking as well. And I just want to double down. It's across both of you guys. I think a lot of people think that they can only really respond to people with their network and check alumni databases. I didn't do that at all. And a lot of people were really receptive. For me, it was looking at a lot of smaller banks because I didn't have success in recruiting. My GPA was relatively low compared to my peers. So on-campus recruiting wasn't really an option for me. So it was a lot of cold outreach. A lot of people are willing to help and just have a conversation because they were helped by people and they want to give back. And you'd be surprised, even if bankers are reputed to be jerks. The other thing is, though, since a lot of us are busy in our jobs, we don't prioritize helping people. Some people do if they have time, but when you're hit with a bunch of work, emails slide. So it's important to follow up multiple times, but I think people get discouraged and are worried that they're bothering somebody. I had a colleague who actually only responds to people after they hit him 2 or 3 times with cold emails for students to make sure they're interested and are like tracking people professionally, because we get a lot of emails. But if you send something 3 times to me, I'll think you're legitimately interested in my firm and my background rather than just mass blasting. So I think that's helpful. And another way I would think about it is, if you stop reaching out to somebody because you're worried you're going to bother them, you have a 0% chance. If you reach out to them at all, it's over a 0% chance. In worst case, the outcome's the same. Maybe they ignore you because you're bothering them, or they ignore you because they just stopped responding. It's kind of the same outcome. But a lot of people aren't leveraging that. I'm currently doing a lot of cold emailing and cold calling to source deal opportunities for investment, and it's been surprisingly productive to find proprietary deals in my space. So I recommend that. And then the other thing is, I think that covers. I think you guys covered so much. I think that's great.
And I just want to again double down on what Elizabeth said about the ERGs. Like, such a powerful tool. Like, there's intra company connections, but also like you'll randomly find yourself doing like volunteer work with other corporations at like this event, right? And then anyways, I've also found it to be super effective.
Yeah. And if I say one more thing, because I said I was done, but I'm not. Volume is important also because you may have some background that's not traditional for your role, or you may be facing an uphill battle. And the more people you talk to, the more the chance they'll like your fit. And just for a specific example, I was a geography major. I had done econ and I ended up dropping it. But specifically the firm that I went to, one of the interviewers, he was a philosophy major, and he really liked liberal arts majors because he felt like they could write and that was important for the role. And then he specifically had bias against finance and business majors and said they couldn't write. So that was super helpful for me. And then he got me an interview and into the process there. There were a bunch of people who said, your GPA is too low. You don't have a relevant major. And so as you have the volume, it just increases your odds. And it's going to be uphill. It's going to be tough, but that may be, hundreds of contacts. It's obviously discouraging, but volume increases your chances sort of across the board. I would just emphasize that.
Awesome. Yeah, this has been super helpful. I do want to leave a couple minutes for one or two questions. If anyone has a question, feel free to put it in the Q&A bucket. I see we already got one about, I know Richard and Elizabeth, you guys have both gone to business school. The question was around what's the group's take on other types of, as opposed to degrees, certifications like CFA, CPA, what other kind of certifications have you seen, and have you noticed those people tend to be successful? Have you noticed they tend to be competent when you work with them? What have been kind of your impression of the other types of certifications that are out there?
I think they're very good. I mean, I wanted to pursue an MBA because it offered me broad management skills and because it offered me school in a structured setting, with a lecture environment. And then lastly, just, to double down on my networking point, it also offered me a very broad network, not just my classmates, but an alumni base, which was important for me switching careers. I'm noticing credentials mentioned in this chat, like the CFA. Here's the thing, if you have a very specific idea of what you want to do, and if you want to be, I guess, a financial analyst or a portfolio manager, and if you don't mind doing self-paced study, consider doing a CFA. It'll save you, theoretically a lot of money. And it's something that you could do at your own pace over a long period of time. My one caution is, because I have a lot of friends who have pursued their CFA in particular, the 10-year success rate for passing the final exam, getting through all 3 exams, is 50%. So I know a lot of people who start to pursue the CFA and then never complete it. I think the success rate is much higher in terms of completion for the full-time MBA program. But this is just something that I want to flag to you guys, because people talk about getting their CFA like it's this, easy process, and they could study whenever they want and cram and pass exams. It could sometimes take a little bit longer than you anticipate. But Richard, I'd love to hear your thoughts on the MBA program as well, because I know that you didn't necessarily make as strong of a pivot as I did. So maybe you have another thought on the matter.
I respect the hell out of CFAs. I mean, I took the level 1 and I was like, oh God, that was hard. And then level 2 was like going to be 3 times as hard. That, oh God. So, it's a awesome certification. I think I agree with you completely, Elizabeth. Like, if you have a job function that you are going after and it requires a CFA, then like, yes, that is like, think of it as like the trade certification to go do that thing. And for me, like, I had no idea what I wanted to do. And so for me, the MBA was a more of a broader approach to the career pivot, albeit more expensive. But then the CFA also takes like, many years, to like 3 years at a minimum or something like that. So, so I think like that's the approach I take. If there's a function that's out there that you're already like pretty sure that you're going after, and like you don't think that like the additional time in business school and the money frankly is worth it, then like, yes, absolutely. I for me, the MBA was a little bit better fit just based off of the my own like ambiguity with what I wanted to do.
If I can chime in on that, I don't have any of these certifications. I would just make sure that with any of these, you get a sense from the industry you want to pursue whether it's valued. My impression is at CFA, I've heard it's more for people who are in sort of asset management roles and managing portfolios, and it's less valued in banking. Your experience may vary, but a lot of people I've spoken in the space, people have the CFA, and it's not really as valued in my industry. So I would just sort of check in and see whether, before you invest the time. Same with the MBA, see if it's worth the time and the money for the pivot you want to make, or the network expansion, or whatever it is, because obviously your time is valuable and your money is valuable. I think having conversations with maybe friends in the space, maybe those who are in hiring positions, see how they would take a CFA and whether they would treat it favorably. I think there's a place for all of that. Also, Masters of Science in Finance, I've heard. I don't know if that's used as much, but that's used for breaking into banking, sort of as like a senior analyst. And there's some programs dedicated to that, but I would really look case by case and then gauge, and people's opinions will vary a lot as well.
Awesome. Well, we are at time. I really want to thank each of you, Richard, Ted, Elizabeth. This has been a fantastically collaborative round robin discussion, which has been great, and a lot of consistent themes across your guys' experiences, even though you all come from really diverse backgrounds. So thank you guys so much. We really appreciate the time. I know myself, I know the people who are on the call who are launching their career to the next level are really going to appreciate this. And I want to say, Natalie has said in the chat that the recording of this will be available on the UChicago Alumni YouTube channel. So if you have any friends who didn't have the chance to join and think this would be valuable for them, feel free to share it. But with that, we'll leave you guys and hope everybody has a good evening.
Cool.
Awesome.
Thank you. Good
Thank
luck,
you.
everyone.